Embassy REIT, that is the stock on our radar. A strong show in quarter 4. The company's revenue rose 11%. Net operating income saw a 9% uptick. For the year gone by, NAV has seen an uptick of 16% on a YY basis, and dividend per unit for the quarter gone by is up around 14%. For the year, it's up around 10%. We are now joined by Amit Shetty, the CEO of Embassy REIT, to break down the quarter gone by and, most importantly, the outlook going forward for the company. Amit, good afternoon. Thank you so much for joining us today. And it's been, 7 years for your listing, the first one in the sector as well. And FY2026 has ended on a good note. Give us a sense of what the outlook is for FY2027, your dividend per unit growth. What is the pipeline that you're looking at?
Sure. Thank you for having me. Always great to be back here. I mean, it's the 7th year journey for us as an industry as a whole. We got first listed in April 2019. Since then, we've grown our portfolio by about 75%. We've acquired about 17.4 million square feet, added the GAV of about 14,300 crores. We've built and delivered about 11.4 million square feet. And during this period, we've leased 32.6 million square feet, plus taken our rent up by 51% and distributed 14,400 crores, given 12% annualized return to our unit holders, which is about 135,000 unit holders. And being resilient during these times, because we've seen, a black swan event of COVID, plus the downside of the market as well. Right. So, I mean, quarter FY26 has been a fabulous year for us. We've actually posted double digits on all our financial metrics. Right. And we've leased about 6.4 million square feet, and thereby 4 million square feet was new leasing, and we've grown the rent by about 24%, 19% mark to market, 5% premium to the market as well. So it's been...
That is during the year.
Okay. During the year. Right. Apart from that, we delivered 3.3 million square feet of new buildings to our occupiers. Right. And, distributions up by 10%, like I said. So it's been a great...
So, Amit, a few numbers. Let's get that out of the way. Net operating income, you expected to increase by close to 13%.
Absolutely.
DPU expected to increase by 10%. So can we expect close to 27 to 28 rupees per unit outcome?
Yeah, that's the guidance.
And what is the exit occupancy that you're expecting for FY27?
So we're looking at approximately about 1.7 million of expiries. Okay. It's too early to say what the exits are, but that's the expiries.
March 26, it was close to 90%?
Occupancy was close to 90%. By area, 94% by value.
Okay, and that will increase in FY27 as
Absolutely. That's what we've given guidance to the market as well. We expect that to grow to about 92 to 93%.
All right. While we're talking about strong growth, what also happened in March is the crisis around West Asia war.
Yeah.
Has that impacted deal signing in any way? You must be having some big plans. GCC is a big portfolio.
Absolutely.
And what is the outlook here? Do you think that is one geography which could continue to see some pressure, and that's why you will have your growth coming in from other areas?
I mean, look, the numbers, if I just talk a little bit about numbers here, right? The FY26, we saw about 83 million square feet of gross leasing. The Q1 was very strong. We saw about 21 million square feet of gross leasing. The supply that came into the market was only about 8 million square feet. We bought in about 25% of that supply. So in terms of deals, in terms of RFPs in the market, there's about 20 million square feet of RFPs in the market. So we're not seeing any slowdown. Right, we're just seeing a drop, compression in the vacancies, plus growth on the rental side.
Okay.
No, go ahead.
So one question is impact, due to West Asia. What has that been on the portfolio? Secondly, there's been so much talk about IT and reduction in workforce due to AI.
Yeah.
So has that impacted demand as far as office space is concerned?
Not really. See, one thing that we need to be aware, see, from an IT sector perspective, if you see, the big players there was Infosys, Wipro, and these guys always had their captive facilities, right? So they were never in the leasing business or the leasing side of the business. But there's been a little bit of churn on the employment side of it, but there is the pie that's really grown bigger right now in terms of GCCs, right? If you see, erstwhile, we were seeing about 74 million square feet of absorption. Now that's grown to about 82 million square feet, 83 million square feet absorption. So the pie is bigger. So, it really is not affecting us.
So what's your exposure to GCCs?
Currently, about 67% of our rent comes from GCCs. And in the last fiscal, we've done 60% of our leasing from GCCs.
So you gave us a number, 51% increase in rentals over the last 7 years. Give us a sense of what happens in next 5 years, considering the demand scenario that we are in. Will you be able to increase rents by that level? How often can you? What is the portfolio coming in for rent revision as well?
Yeah. So let me just talk a little bit about rent and how the dynamics have played, and then I'll come to the portfolio itself. In terms of rent, what we've seen the last year, like I said, 4 million square feet, we were at about a blended rent of about 82 rupees. We've taken that to 102 rupees, right? Okay. So a 24% jump, 19% on the mark-to-market, 5% premium. So if you see the vacancy last year was about 19%, that's come down significantly to about 15-16% countrywide. That's taken the rental across the country anywhere about 10 to 15%. And, developers like us, we've been building meaningful, large ecosystems. So we've always got a premium to the market. So we believe that this trend will continue for the next 2 to 3 years.
Quick last question. Yeah. Chennai, Bangalore, and Pune, that's why you're active most. Yeah. Chennai, we understand you've signed a large deal recently. So which is the micro market that you're seeing the most growth in?
See, Chennai is a very unique market, and we're seeing a lot of, new clients coming into that market, right? We've signed something rather very big in the recent past, 650,000 square feet, single take-up. It's a GCC client. But having said that, we are seeing a lot of activity in OMR and PT Road, and PT Road is where our asset is located.
Okay. Amit, last question from my side. The hotels business, how big is it as a part of the overall portfolio? Yeah. And there was a blip in NOI there. Yeah. Is it something expected to continue because of the crisis we are in? And Jefferies expects a 25% growth in your hotels NOI over the next 3 years. Yeah. Is it something which is achievable? Absolutely.
So two things. The hotel is about 7% of our total portfolio. Last year, we saw a little bit of blip in our, the overall EBITDA. A couple of things. One was the West Asia conflict, because of which travel actually reduced a little bit. But having said that, there was also a little bit of, the gratuity law which came in. So, there was a little bit of dynamics there as well. But having said that, we are building 2 more hotels, which will add about 518 keys. And therefore, we see a very positive uptick on our NOI as well as EBITDA.
Okay, all right. Take that point. Thank you so much, Amit, for joining in today with your insights and the outlook going forward on the business. That's the word coming in from Embassy REIT. Strong end to FY26 and a positive outlook for FY27 as well.